So, Delia, to that point from Philip, what are your thoughts on some of the unique challenges as well as opportunities around asset evaluation within the alternative asset space, and especially within an emerging alternative asset class such as crypto?
Yeah, I mean, I mentioned a little bit earlier is that the problem that investors actually have is that it's a new asset class, right? So everybody's
Mm,
really struggling to build very robust valuation models, right? So
mhm,
in traditional finance, again, the work was done, right? So you definitely see a lot of analysts that know exactly what type of valuation they usually run. They have their DCF kind of spreadsheets. They go and sit in kind of companies' earnings calls, right? They take notes and they run all those kind of models literally real time, right? In the alternative world, it's a little bit different, right? Because everybody's kind of trying to figure out exactly what drives the price, right? So a few years ago, you only had the traders, right, in the digital asset space. And those traders were just really were not looking at valuation, right? So the value was not something that was driving their investment. It was just the price, right? The intraday price or kind of very high frequency type of strategies. Now you are definitely with the industry maturing, you definitely see those models actually maturing, right? And you see a lot of hedge funds coming up and really kind of start building those kind of factor models or kind of looking at different type of scores or different type of modeling, right? So in traditional finance, you have a lot of kind of we call factor modeling, right? Where you go to the momentum. Momentum is still something that you can actually build in the digital asset space. But fundamental, the question is what is fundamental in a digital assets or in an alternative type of space, right? So we look at different type of metrics. We look a lot of like on-chain or network type of metrics that can drive that quantitative fundamental kind of aspect of a particular asset, right? So all those models are evolving, right? We are still not at the stage or at the phase that I can say those are very robust. And the main reason I said we are not there yet because to build robust models, you really need to back test them. You need to kind of test them through different economic cycles. And this asset is very new, right? So
mhm.
you can really say, okay, it really works in a hyperinflation, or it really works if you have a really a shock in a geopolitical macro economic environment. And then you can try to really understand how it moves through those and how what really how should I say how you can actually value and price that asset in different economic cycles.